others to join us. We have people joining us from all over Australia today, which is fantastic. And it's great to have you here with us. A few more people joining now, which is fantastic. Okay, well, give a few more moments and we'll be ready to start. Just to let everyone know, we are recording this session as well. Our numbers are building now, so we might start because it's right on 12 o'clock here in New South Wales, where we're joining you today. So welcome. I'm Mel Monaco. I'm from the RIC team. It's really pleasing to have you guys here with us today. We've got people, as I said, from right around Australia, so that's really good. We thank you for joining us for our RIC webinar series. Today we'll be talking about the drought loan in particular. And this series is part of our information educational series here at RIC Loans. We want to try and increase awareness and education about who we are, what we do, and how we can help farmers right across Australia, potentially with our loans. Before we get started, in the spirit of reconciliation, RIC acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respect to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples today. So today we're actually coming to you from Wiradjuri country, which is in the central west of New South Wales, where our head office is based in Orange. So our agenda today is a little bit about us in terms of RIC, Regional Investment Corporation. We simply like to be called RIC. And we're going to talk about our drought loan, which is one of our key loans. We're really thrilled to have Tim Webb, who is a merino producer from Forbes, New South Wales, in the office with us today to tell us all about his story and how he has used a drought loan to help him strengthen his farm business. We'll help you with some additional resources and hopefully answer a lot of your questions today as well. Thanks to all the people who have submitted their questions already. We've taken those into account and we've added them to our presentation today, and hopefully we'll be able to answer most of those along the way. But we will have a chat, in your toolbox. If you're joining us from a desktop, there is a Q&A little tab. So if you wanted to jot down your questions in there, we hope to be able to answer them at the end. We also have a feedback poll. So we do value your feedback for all the participants who are joining today. So please feel free to do that towards the end. That will actually help us give some really good insights to how we can actually improve these forums in the future. Also, just a reminder that this webinar is being recorded, and we'll email that out through to all of you at the end of the session and to others as well. So moving on, I'm Mel Monaco, as I said. I look after public affairs and marketing here at RIC. Today with our presenters are Mitch Adderman, who is our agri-lending manager and a specialist in our loans. We also have a RIC drought loan customer, Tim Webb, from Forbes, New South Wales. So about us, RIC is an Australian government provider of low interest loans. We're committed to strengthening Australian agriculture and building thriving regional communities. Our focus is to help farm businesses to prepare for, manage through and recover from severe business disruptions, whether that's drought or it could be natural disasters and other impacts that may come out, unforeseen business disruptions. We also help first generation or new farmers who have some experience on the land and next generation farmers to start a farm business or help with succession planning as well. We've been around for just over 5 years. We were established in July 2018. And we are a national consistent program. As mentioned, we're based here in Orange, where we're broadcasting today. And most of our team is actually based regionally. So we do have a strong connection to the land and to agriculture. So we have a number of loans across our portfolio, including a farm investment loan, which looks after recovering from severe business impact and preparing for future financial disruptions. The Agri-Starter loan, which are for first farmers and also support farm succession arrangements. The drought loan, which we'll talk to you in depth about today in terms of eligibility criteria and how to apply. And we also have an Ag Biz Drought loan, and this is for farm-related small businesses, which feeds into the supply chain, and that's focusing around drought as well. So in terms of how we actually have a really strong, important impact to agriculture across Australia, in the past 5 years, we've actually given out 3,020 loans in the past 5 years, and this is to the value of $3.25 billion. So quite a significant amount of funding going into supporting small businesses and farm businesses right across Australia. It's estimated that we've had $268 million saved in interest alone. So on top of that commitment of the funds given to farmers, also interest saved. So that actually has a really strong direct impact on the farm business in terms of strengthening their business, as well as an indirect flow-on effect to building regional communities as well. We do have allocated funding from the federal government. At the moment, with our loan program, we have $141 million in loan funding remaining for this financial year alone. So we take an annual survey from RIC customers, and we do like to understand their experience with us. This is what our customers had to say about us in our last survey. So it's really pleasing to see that 55%, over half of the people who have RIC loans, actually agreed that their RIC loan enabled their farm to keep operating. Very important that many would have not maybe had a farm if they didn't have a RIC loan and that funding support. So that's very valuable. Other stats we have here is 88% agree that their RIC loan has made drought and natural disaster recover easier. 83% agreed that their RIC loan enabled them to improve their drought resilience. 86% agreed that their RIC loan has given them greater confidence in the future. 73% agreed that their RIC loan has allowed them to grow their farm, and a further 79% agreed that their RIC loan allowed them to pay down their debt. So the value of concessional lending and our low-cost loans are actually helping to strengthen individual farm businesses and also the ag economy for Australia. Now, RIC works alongside your bank. We are not a bank, but we do have a partnership with them because most of the people who have our loans, or all of them in fact, need to have a commercial debt. So they need to have an agribusiness or commercial loan with their bank. So Mitch will talk a little bit more about that because that's one of our key eligibility criteria. But in terms of how we work with the bank, we are not a bank, but we operate with similar processes. We conduct credit assessments of all applications. RIC loans are actually designed to work alongside your bank. Our RIC customers maintain their bank relationship through the term of their loan, and we actually share the commercial risk with banks, and this helps to strengthen the Australian agriculture sector. So I might take a pause there and hand over now to Mitch, who will talk through our drought loan in terms of eligibility, how to apply, and answer many of your questions along the way. Thank you.
Thanks, Mel, and thanks everyone for joining us. So, looking to run through what the everything that pertains to the drought loan, in particular, the purpose, its features, its uses, chat about eligibility, whether you're eligible or not, talk a little bit about financial need in a bit more depth, which is one of the eligibility criteria, compare the drought loan to the farm investment loan. There are some similarities there. And we'll touch on the Ag Biz loan, which is a drought loan, but for off-farm businesses. Then we'll run through the application process and run through some of the support mechanisms that are available to you as you consider and apply for the drought loan. Excuse me, I'm just playing. So the actual purpose of the drought loan is threefold. Firstly, to manage through drought. And it was certainly that came into play 2019, 2020, when a good chunk of the eastern part of Australia was in drought. Currently, less so in the east, but certainly in the west. Currently, you may be from the west and you're looking for the RIC to help you manage through current drought. Secondly, a purpose is to recover from a drought. So you may be still recovering, and a RIC drought loan is for that purpose. And then thirdly, its purpose is to prepare for the next drought. Unfortunately, droughts are a part of Australian agriculture. So that's the intent and the purpose of the loan. So I just want to talk about the features now. Probably the main one is the maximum size of the loan. It's either $2 million or it's the size of your commercial debt post the RIC loan being put in place. So, for example, your purpose might be to refinance half of your bank debt, and you might have $2 million of bank debt. The maximum we can go to is whatever the balance of your bank loan is post the RIC loan settlement. In very simple terms, if we were refinancing half of it, the maximum we could go to is $2 million. It's on a variable rate of currently 4.9%, and it moves. We reset that variable rate every 6 months. It's based off the government 10-year bond yield, which works similar to the RBA cash rate, but not the same. But as I say, it is variable. We don't have a fixed rate option. But our intent is that it's materially underneath commercial rates, so as to be a benefit to users of the RIC loan. The term is 10 years, or the maximum term is 10 years, and 5 years of that is interest only. And so the first 5 years, interest only, there's no principal reduction. Then the remaining 5 years, you pay off 1/3 of the loan, or 1/15 per annum. So you don't pay it off entirely over the 10 years. And Mel mentioned the importance of maintaining a relationship with your commercial bank, because the intention is at the end of 10 years that you'll refinance the remaining principal component of the loan with your commercial bank. And we would expect, under normal circumstances, that the value of your property has increased, your equity in your property and business has increased, and therefore you'll be in a far stronger position to refinance. So at the end of 10 years, you will have paid off 1/3 of your RIC loan, and the remaining 2/3 to be refinanced with a commercial bank, with hopefully yourselves in a better position. Good news is there are no fees for application, no fees for early repayment, and there is no fee for full payout of the loan either. But one restriction is there is no redraw facility on the loan. So if you pay off $100,000 off your loan before it needs to be paid, there's no ability to repay that. In fact, our clients often repay their bank loan first. There's no requirement for that 50-50 to be maintained during the life of the loan, only at the commencement of the loan. So uses for the loan are many and varied. Certainly operating expenses, capital expenses, drought management, and purchasing new land sometimes. As long as the purchase of land allows you to diversify your holdings, you might have all your property in one particular place and you want to diversify the microclimate risk. And refinancing debt. And refinancing debt is certainly a large portion of the loans we have in place at the moment have utilised that component, and it can be a combination of a number of these. Very often a typical environment is a typical situation is a client will use part of the loan to refinance some commercial debt, then another component to perhaps restock, or they could be paying off their stock and station agents fee or facility, which might be at quite a high interest rate. It's important to know what uses the loan can't be used for, and generally they are for domestic purposes. You can't put in a swimming pool or go on the purpose can't be for an overseas holiday. It needs to be for commercial purposes. So the eligibility of the loan, there are a number of eligibility criteria, and this is where we do differ from a commercial bank. Similar to a commercial bank, you need to be able to demonstrate that you can service the loan. And in servicing the loan, things we look at is your ability to make repayments, but also provide a sufficient standard of living for yourself, and be able to reinvest into the business to maintain a certain quality of your machinery and the actual property. As we've mentioned, you need to have either have existing bank debt or in the process of obtaining it. You may have no bank debt. It is pretty rare, I must admit, for our applicants to have no bank debt, but potentially they may not have, but have a borrowing need. In that case, it'll still be 50-50, but we ask if you don't have a bank loan that you've made substantial steps towards obtaining a loan. And we want to see that you will be contributing at least 75% of your labour to the farm business. And the reason for that is we don't want to be financing farm businesses where it's not the applicant's main business pursuit. Certainly we don't want to be financing hobby farms. So at least 75% of labour. And a point of clarity on that one, only one member of the borrowing entity needs to demonstrate that 75% of labour. So you might, it might be a husband and wife business, and either the husband or the wife work full-time off farm, as long as the other partner can demonstrate that they contribute 75% of labour and also earn 50% of their income. Look, I must admit, for serious farm businesses, that's rarely a problem to demonstrate that. We are a secured loan, so you need to provide sufficient security. And the security requirements are generally very similar to a bank. Generally, it is the farm property, sometimes topped up with some off-farm. It might be an off-farm investment property. You might have water. In some cases, we'll take a stock loan. But you must appreciate, with a livestock loan, they're short-term assets, and we're offering a long-term loan. And you must be an Australian citizen, or at least one member of the borrowing group needs to be. you need to have 3 years experience, and you need to provide us with an ABN. So you need to be a business, and you need to be a business that has been in operation for a reasonable period of time. Now, if you have less than 3 years experience on the farm, you may in fact be eligible for the Agri Starter Loan. So all is not lost in that circumstance. But you need to have demonstrated a severe business disruption, often through a drought, and so yeah, you need to have some experience in the business to demonstrate that. And I might say, as far as eligibility, we list the primary eligibility criteria on our website for pretty easy reference. And there is a nice little quiz you can take on the website. Then on the website as well, there's more detailed eligibility guidelines that dig a bit deeper if you have any further questions. And finally, and I'll touch on this a little bit with regards to the support that is available to you during the application process. But we have a contact centre of lovely people located in Orange that you can call and ask questions and clarity for any aspect of eligibility and the loan in general. So businesses in financial need, which is one of the eligibility or principal eligibility criteria. And the purpose of this is we don't want to be financing people who don't need a concessional loan. And an extreme example of that might be a corporate farm with, quite unlimited investment funds available, a substantial size, have easy access to bank debt, and in the sheer size of our loan, it's not going to make a difference. And we don't want to be financing people who haven't encountered a severe business disruption. But in Australia, most farms, to be fair, have encountered the drought of 2019, 2020. As I say, some are incurring that now. So option one, significant financial impact through drought. If your farm is currently affected by or recovering from drought, you must demonstrate a significant financial impact over a 2-year period. And sometimes that can be you might have accumulated debt as a result of the drought of a few years ago, and you're still holding on to a reasonable amount of that debt. But that's an increase in debt. That generally satisfies that. You may still be restocking from a drought event or a significant impact. So you might be in drought at the moment, and we like to see that you've at least had 12 months, and that you'll have at least another 12 months to recover from that. And again, if you are in material drought, it isn't a hard criteria to fulfil. But you don't necessarily need to have been affected by drought. That's option 2, loans for drought preparedness. If you want to prepare for a drought, and you still need to demonstrate that you've been impacted by a negative or a severe business disruption. That might be from flood, might be from disease, might be the collapse of a market, but something outside of your control. If that's happened, just demonstrate it to us. It may be a bunch of things. So we look at the cumulative effects of adverse events. And again, that's for drought preparedness. So we have a farm investment loan, which is similar, but there are a few differences. I think about a drought loan, we want to see that you have a drought management plan in place, that you are preparing for the next drought, and that might be, you might come to us and say, look, we want to increase our water license. We want to install some dams. We want to install some silos, some hay sheds. We want another block of land 50 k's away to protect us from microclimate issues. But yeah, we want to see a plan in place. And one of the major differences between the drought loan and the farm investment loan, and we are governed by government legislation, and with a farm investment loan, you must sell interstate or overseas, so cross borders. Not entirely. Again, that aspect isn't entirely difficult to show for a, say, cattle producer, a dairy, a grain producer, because you're selling into major suppliers. Whereas the drought loan, there isn't that restriction. So I want to talk about the AgBiz drought loan. It's available for small businesses, not farms, but for small businesses that supply to farms. And typically the type of businesses might be contractors. Of course, when there's a drought on, when there's no crop to harvest, it's not only the farm that suffers, it's those that supply inputs and contractors, machinery contractors primarily. They are impacted as well. It might be consultants, it might be your ag stores. The principal thing is that the majority of your business must be servicing farms. It's a little bit different in terms of terms than the drought loan. It only has a maximum of 500,000, but all the other terms are very similar, particularly the 10 years, a 10-year term and 5 years interest only. And it can be used for, again, business purposes such as paying contractors, pay operating expenses, pay business expenses, and in some cases refinancing debt. And some of the debts we have financed for contractors have been leases, where you've got a couple of headers that are being leased through a leasing company, and you've got no harvest to harvest, no crop to harvest. The RIC AgBiz loan comes in very handy in that situation. So our application process, we try our best to make it as easy and seamless and painless as possible. The process is all online via our website, and it's just go through it. It's a step-by-step process. And again, you have the availability of our contact centre people to ask questions at any point in time during the application process. So you submit when you eventually fill out the form, get your documents together, and the type of documents that you'll need to submit with the application form are cash flow projections. And the cash flow we use is not necessarily your next year cash flow. It's the cash flow of your business when it's in its steady state. So you may be destocked at the moment, and we'll look at it at average stocking levels, not during absolute boom times when there's too much grass in the paddock, not when your moisture profile is 100%. And we'll look at long-term averages and the like. So that's the type, and we call it a year in, year out. Your bank might call it a sustainable year. There's a number of names for it, but just your business during normal yields and normal prices, not absolute boom time, but certainly not drought time. We like to see your last 3 years' financials, your statement of position or your personal assets and liabilities. There'll be some ID requirements, and there might be some legal documents we require as well, such as trust deeds, and we also require rates notices just to enable us to perform a property valuation. So you'll submit your application. the loan gets assessed. That's my job. I run a team of assessors. They're all good quality people, a lot from with agricultural banking experience. Your application will come to us. We'll have a look at the documentation. If you're missing a document, a cash flow or a set of financials or some bank statements, we'll let you know. We won't return the application to you, say, declined, you haven't given us enough info. Our intent is to give you the money if we can. So yeah, we very much work with you and do our best to make it as easy as possible. We get a question, how long does it take to process the loan and get a decision on the loan? You know, are we approving it? Are we declining it? Internally, we try and get this done within 20 days. But one of the major impediments is we have to work with the bank and we have to work with you with obtaining the information. So there can be a fair bit of time for us. We're waiting for a response from yourself or another party. Don't mean to be blaming the banks here for slowing it up, but yeah, there are a number of parties. There might be a solicitor as well if there's a property settlement involved. Once the loan is decisioned, then it goes to documentation. One of the major typical documents is a deed of priority, and that's a document typically will take security over your property that a bank already has security over or a mortgage. And typically the bank will go first mortgage and we'll go second. The advantage for the bank is they're de-risked to some degree. So they're in a superior position, but we're happy to go second. And so that to enable that to happen, to be formalised, there's a document called a deed of priority, and the bank will tell us we need to be first on this loan for X number of dollars. So that's just an example of some of the negotiation that needs to happen before the loan is documented. But that is one of the documents. Mortgage, loan terms, they're typically the documents. Again, generally nothing more than a bank will require, sometimes a little bit less. Then eventually the loan is settled. Either you get the money or the bank gets the money in a refinance situation. If there's a specific purpose you're restocking, some of those situations we'll ask to pay the stock and station agent directly. If you're buying particular assets, we'll ask to pay the particular supplier of the assets. If it's a large one, if it's small, you know, we'll place the money into your working account, and it will let you pay direct. But it's just important for us to make sure we make sure the money goes for its intended purpose. So application support, always a scary thing. Doing a loan application can be quite harrowing. We're experts at the RIC at assessing loans, but you're not necessarily an expert as an applicant in putting a loan together. So there is a little bit of support available. First thing we recommend is you do talk to your bank, let them know your intentions and that the bank has your support. Most of the time, a bank is happy to see you have a portion of your debt onto preferential or subsidised RIC terms. It's good for you, and we do. In fact, there's hardly a bank I can think of that we haven't dealt with. We definitely deal with the majors, Rabo, Rural Bank, Suncorp, BOQ, etc., etc. So, yep. As I say, if it is new money and there is an increase, we don't necessarily need to see that the loan is 100% approved, but we want to make sure that you have spoken to them and your concurrent application is in progress. The drought loan application form, which I say is online. It's a step-by-step process online. It does take some time, so set aside some time is our recommendation. You'll need to, as I mentioned, attach various documents, financial statements, assets and liabilities, projected cash flow, personal ID. We'll come to you with anything missing, such as legal docs, such as trustees, if there is a trust part of the borrowing group. We like to see your drought management plan. Now, we don't necessarily have a pro forma on that, but just as long as it's you can describe what your plan is. Any help, again, give us a call. We want to hear from you, and we want you to talk up your enterprise, talk up yourself, talk up your enterprise, because one of the major reasons we decline a loan is that we don't see it as viable, and we don't see it has the ability to beat interest going forward. And a lot of the time, we'll receive financial statements when you've been in a drought. So the previous history doesn't necessarily show that you are viable. So you need to talk about the business again in its steady state, in its normal state. Again, go to the website. There's not only the detailed guidelines, but there are the little drought quiz which you can quickly sort of run through. Again, on the application process, application form, step by step, there are checklists, particularly a checklist on the type of documents we require. We don't leave you guessing. We like to think we don't leave you guessing as to what you should attach to the application. Certainly, we encourage you to talk and engage with your trusted advisor, whether that's accountant, bank manager, rural financial counsellor, solicitor, old mate from the next paddock over, whoever you get your advice from. But yeah, certainly, again, don't mean to sound like a broken record, but we are available on the phone as well via our 1800 number, which again goes directly to our team in Orange. So in summary, in the application process, the important things are that we look at equity and security. We like to be, most farm businesses, we like to see that there's equity in there, which acts as a buffer for the next drought. So, you do have access to finance for the next downturn. We want you to talk about your experience, and again, require a minimum of 3 years. We want you to talk through your cash flow and how the business, your farm business, under normal circumstances, will be able to service our loan and the bank loan and all commitments. We like to know that you are enthusiastic about your business. At the end of the day, it's a human decision, applying the criteria. But if you come to us half-hearted, and yeah, we like to see enthusiasm. Like to know your relationship with your current lender, and yeah, a plan to manage through the next drought. So that's it from me, Mel. I'll hand back to you, and I'll be available for Q&A. Any questions that people on the call might have. Thanks.
Yeah. Fantastic. Thank you so much, Mitch. Very detailed and very helpful information on all things eligibility and loan uses and our application process. So as Mitch said, we do have a Q&A feature. You might see that on desktop in your top toolbar. So if you wanted to pop in any questions that you have from that piece, please do so. We've got a few at the moment, and we'll address those after our customer story. So without further ado, I'd love to welcome Tim Webb, who is a merino sheep producer from Forbes, New South South Wales. So thank you so much for joining us today and being here in our office here in Orange. You've actually experienced, drought to the most severe cases in terms of the prolonged severity during 2017 right through to 2019. So just tell us what that was about and why you've really looked to RIC loans as an option for you.
Oh, hello, Mel. Thank you for the opportunity. Look, our story is probably fairly typical of the Central West. We had a fairly major increase in the amount of country that we bought prior to 17, the onset of the drought, and so consequently, had substantial debt. And we thought we were pretty well prepared. Had 1,000 tonne of grain on hand, and 14,000 sheep and new properties. And then 17 came along, and we started feeding. It's not our first rodeo, so we started feeding, and it went on and on and on, right through to effectively some of the statistics. I don't want to bore everybody, but we put 2,000 tonne of grain on the ground, cut 1,500 carriage-on trees out of a telehandler, did 820 days in a row feeding sheep, and I did over 100,000 kilometres with a sheep cart on the back feeding livestock. So it was a pretty big commitment, and by the end of 19, it was becoming pretty threadbare, the resources, so we looked at thinking that the RIC was offering some pretty attractive terms at the time, and so we refinanced some of our commercial debt. We borrowed the maximum, $2 million, and the interest saving and the pressure that it took off at that time was just enabled us to get through. It rained in 20. We grew a ripping good crop in 20, and managed to get all our breeding stock and all our stock through. And it became apparent in the drought that when you owe money, it's not necessarily as easy as destocking and going to the coast until the drought's over. Your commercial lenders require you to service debt, and consequently we could keep, by taking some of the pressure off, we could buy grain and so forth, and keep our wool clips coming in, the sale of stock going out, so we could service our debt. And by the end of when it did actually break, we're in a position not to have to go out and pay $300 for breeding stock and things like that. We were in the position to get up and get going straight away, and which was a fantastic help. And so we found that the RIC loan was wonderful. Wonderful people to deal with. You're only a phone call away. Very prompt, very, very professional, and a very pleasant experience all in all.
Fantastic. Well, thanks for sharing that. It sounds like the RIC loan did help you during a very tough period of time. Obviously, you're a very experienced, established farmer, but this drought that hit was quite substantial. But you were able to keep the business going, keep your breeders, and keep investing in your business to come out the other side.
Yeah.
Yes.
Yeah, that's right. It's without it, I mean, we may have got through the drought still, and we'd probably still be in business, but certainly it took a lot of pressure off at a critical time, and it's enabled us to restructure the business since then. We have sold some of that country and bought more country next to our home block, and we were able to pay off our commercial lender and a substantial part of our RIC loan, and so it's taken us from a position to a really strong financial position, which is going to enable us to do some succession planning into the future, which is great. Yeah.
So yeah, fantastic. So it sounds like you're in a really good position now. And so what would you say to anyone today that's listening about the RIC loan, your RIC loan, your experience with RIC and the process?
Yeah, well, look, I found it. My wife and I, Jenny and I, found it pretty seamless, really. If I had any advice, I think, as Mitch alluded to, it's an advantage to have your cash flow projections up to date. You can't expect anybody to finance your business if you don't have a plan going forward, and that's effectively what a cash flow projection is. And I take his point about being in an average season. We don't want to be gilding the lily too much and thinking we're going to make an absolute fortune. We need to be relatively conservative, but not overly pessimistic by the same token. So I think they need to be current at all times, because you're providing a roadmap into the future for your financier. Cash flow projections, statement of position, obviously assets and liabilities, and your financials is important. So not everybody, probably is up to doing their cash flow projections, but you can certainly find help these days to do that. So I'd recommend that you have all those things in order. But apart from that, very seamless, very prompt and professional service from RIC. So that'd be my tip, I guess.
Fantastic. Well, thank you so much for sharing all that information and very helpful advice and information for everyone listening today. I might get you to stick around if you can, Tim. We might have a few questions that are coming up, and I might get Mitch to pop back on too. We've got a couple of questions that have come through the Q&As. Before we get to those, though, just letting you know, we will pop up a little feedback poll as we're sort of coming to the end of the webinar. So really appreciate any feedback that you have about today's session. So we have had a couple of questions, and I might just start with this one maybe for you, Mitch. When you were talking about restocking, will this actually include restocking of tree crops in horticulture in terms of the loan uses?
In short, yes. An example of some of the tree crop clients we have as clients: pistachio, macadamias, citrus, and certainly drought and probably primarily flood has been the effect on those businesses. So yeah, replacement of trees is just like any other capex, capital expenditure. So yeah, certainly that is an eligible use.
Okay, fantastic. There's another question here that we've got from William. With the application and assessment process, is it best to have a farm business resilience plan? So obviously drought, we spoke about that drought management plan. This is feeding into that space. Yeah,
look, even better. Look, they sound like the similar type of things, but a resilience program takes in other factors in addition to drought. Any farmer on the call will know that there are certainly other fish to fry or hazards in addition to drought. And yeah, happy to finance those as well, either within the drought loan or the farm investment loan. But that is, if any actions you want to take to put your business or to de-risk your business, that's what the RIC is about.
Okay, and now Tim, this one's for you actually. Just interest in whether you used a farm consultant or a rural financial counsellor to assist you with the application process.
Well, in our case, neither. Not to say that we wouldn't use a rural counsellor, but we were fortunate enough to have done a lot of cash flow projections in our career, and always have those sort of things on hand anyway. And it wasn't difficult, but I'm a great believer in having my cash flow projections up to date pretty much all the time. They're an ongoing thing that I adjust all the time because I just find it very comforting in a way. It sounds strange, but it gives you a roadmap of where your business is going and less surprises come over the horizon at you. So, but I certainly would, encourage anybody to use a rural counsellor and to do that. So, yeah.
Okay. We have a question around any RIC officers or agri-lending specialists out in the field on the ground talking to farmers, and how do farmers find out about RIC? I might be able to help with that one, and Mitch, you can probably jump in as well. We do attend a number of community-facing events. We will be at Beef Australia up in Rockhampton coming up in May. We have a number of events as well that we'll be attending as a team, and working with rural financial counsellors and other collaboration partners to increase awareness and educate about our loans. We do obviously have social media channels. We have our website. We have a number of different ways that we like to communicate and educate, improving awareness of Regional Investment Corporation and RIC and what we do. So we're always looking for opportunities to tap into those channels and those networks that can help get information directly to the farmers who are in financial need. Our loans are not for everyone, but they are definitely for the good farmers who may be facing those tough financial times. Mitch, did you have anything further to add on that one?
Well, we try to be proactive to get in front of the financial counsellors, rural financial counsellors, any key influencer, the peak bodies we speak to, accounting firms, those involved in succession management. We don't go to every event that we're invited to, purely because we have limited resource, but particularly we like speaking on forums such as this to specific groups, but on a one-on-one basis, it's through the contact centre. Give us a call. But Mel and her team are always inventing new ways to put out the word of the RIC.
Yes, trying. So we do try to do these forums on a quarterly basis. We have done AgriStarter loan, we have done farm investment loan. Obviously this one's about drought, but we are planning another AgriStarter loan forum, which will come up probably in May. So if you know any farmers in your network who might be interested in, knowing more about succession planning and how our loans may be able to help in that space, or even if they're new or experienced farmers, been on the land for 3 years or so and, might need some help, in that financial space as well. I've got one last question, I think, just before we need to wrap up. I do, encourage you to do our survey if you haven't already, and also feel free, if we haven't answered your question today or there might be something that pops up after the session, please feel free to ring our team, the contact centre. They're available during business hours, and we've also got an email as there on the screen for you as well. So the one last question, I think this one might be for you, Mitch. It might be a little bit technical for me, but do you take a RMD over a company and or a PPSR over eligible assets? A few acronyms there that I'm not familiar with, so
RMD, PPSR, GSA, GSD. They're all charges, general charges over assets, not specific charges over land per se, not like a mortgage. Occasionally we do, but generally we don't. Being ranked second behind someone else on a GSA, which is the modern version of an RMD. We love acronyms in the world of finance, even agri-finance. So occasionally with the AgBiz loans we do a bit, because often, or in some circumstances, we don't have sufficient bricks and mortar or land security. A contractor might have substantial machinery, but the short answer is generally no, purely because we just don't see it adds enough value as a second mortgage holder, such as the RIC.
Okay, good answer. Okay, well, I think that brings us to the end. Yeah, so just a reminder that this webinar is being recorded, and you will actually all receive a replay straight after this session, so you can go back and rewatch and look over any of those key points that were discussed today. Any questions, please feel free to reach out to us. And thank you very much. Thank you so much, Tim, for joining us. It's very worthwhile having you on board and as a RIC customer and sharing your experience. I'm hoping that actually helps others who may be interested in RIC loans to learn a little bit more about loan uses and how that can actually help strengthen farm businesses. And thank you very much, Mitch. As pleasure as always.
Thanks all.
Thank you. Bye-bye.